everyone, we're the group 2 and today we will discuss the chapter 5, the partnership dissolution with liquidation. So, partnership dissolution refers to the termination of the partnership relationship which can occur due to various reasons such as mutual agreement, death of a partner, or bankruptcy. This process involves winding up the partnership's affairs, including settling debts and distributing remaining assets among partners.
Causes of dissolution with liquidation. Bankruptcy of the firm when the partnership is unable to meet its financial obligation, leading to its collapse. Mutual agreement among partnership to close the business. Partners may decide to dissolve the partnership by mutual consent, the purpose of which is accomplished already if the partner was formed for a specific purpose and that purpose has been fulfilled. The partnership may be dissolved. The period covered in the partnership contract has been terminated. The partnership agreement may specify a duration, and upon its expiry, the partnership dissolved. Definition of terms. Dissolution. The termination of partnership extends. Termination, the point in time when all partnership activities cease. Liquidation, the process that occurs between dissolution and termination. It involves winding up the business, converting non-cash assets into cash, settling liabilities, and distributing the remaining assets to partners. Realization. A building for cash. Realization. Gain on realization occurs when the selling price or proceeds from the sale from non-cash assets exceed to their book value. Example, if merchandise costing 20,000 is sold for 25,000, the excess of 5,000 realization because the proceeds are greater than the cost. Loss on realization. Loss on realization occurs when the book of value non-cash assets exceed their selling price or proceed. 20,000 is sold for 18,000. The difference of 2,000 is considered a loss on realization because the proceeds are less than the book value, indicating a sale at a loss. Capital deficiency. Capital deficiency arises when a partner's share of realization loss exceeds their capital credit. Example, if Mr. Cuyano Jr. has a capital credit balance of 30,000, but his share of the realization loss is 33,000, he develops a capital deficiency of 3,000, resulting in a debit balance in his capital amount. Deficient partner. A deficient partner is a one who has a debit balance in their capital account after accounting for their share of the realization loss. This indicates that their capital credit could not absorb their portion of the realization loss. Example, if Mr. Cuyano Jr. has a capital deficiency, he is a deficient partner. Solvent partner. A solvent partner is a deficient partner who can cover their capital deficiency by paying other partners or to the partnership. Example, if Mr. Cuyano Jr. can pay his capital deficiency, he is a solvent partner. Insolvent partner. An insolvent partner is a deficient partner who cannot pay their capital deficiency due to personal bankruptcy. For example, if Mr. Cuyano Jr. cannot pay his capital deficiency, he is an insolvent partner. Partner's loan. A partner loans represent the amount of money borrowed by the partnership from partner. It is a liability of the partnership to the partners who extended the loan. Right of offset. Right of offset is a legal principle that allows a deficient partner to apply their loan to the partnership against their capital deficiency during the liquidation process. This can be done partially or fully. To illustrate, example, Mr. Zards Remodio develops a capital deficiency of 5,000 after receiving his share of the realization loss. However, he has extended a loan to the partnership of 7,000. Even Mr. Remodio is solvent and can pay his capital deficiency of 5,000. He can exercise the right offset by applying his loan against his capital deficiency to the partnership. Thus, his loan account will have a balance of 2,000 after his offset. Theoretical loss. Theoretical loss refers to the difference between the book value of non-cash asset and their actual realized value during the liquidation process. This occurs when liquidation happens in installments and some non-cash assets remain unsold. For example, if a partnership non-cash asset total 200,000 and 50,000 worth of these assets are sold in the first installment, the remaining 150,000 pesos represent the theoretical loss. This theoretical loss is also sometimes called possible loss because it's an assumption that the remaining non-cash asset cannot be sold anymore. This theoretical loss is treated as a loss in theory only and is used to determine the partnership abilities to absorb possible losses based on their profit and loss ratio. This information is crucial for determining who among the partners will receive priority in receiving cash as it becomes available for distribution. Types of liquidation. Liquidation by lump sum or total. This involves selling all partners' assets at once. Liquidation by installment or piecemeal involves selling partners' assets in multiple installments over a period of time.
Steps in liquidation process. When the partnership is to be liquidated, the book should be adjusted and all nominal accounts are closed. The drawing account, which was held open in a going concern, is closed to the capital accounts because cash settlement shall be based on the partner's capital balances. Steps in liquidation process. When the partnership is to be liquidated, the book should be adjusted and all nominal accounts are closed. The drawing account, which was held open in a going concern, is closed to the capital accounts because cash settlement shall be based on the partner's capital balances. Step 1. Record the sale of non-cash asset and distribute the gain or loss on realization to the respective capital accounts based on their profit and loss ratio. The gain will have the effect of increasing the partner's capital balances while the loss will reduce their respective capital balances. Step 2. Pay the partnership's outside creditors. Step 3. If upon distribution of the loss on realization, one of the partners develop a capital deficiency, he make good with such deficiency by any of the following means. A. Exercising the right of the offset, thereby applying his loan account to his capital deficiency. If his loan account is not enough to cover his deficiency, he may give additional cash for the balance. In case he is insolvent after the offsetting, the balance of his capital deficiency is absorbed by the remaining partner balances based on their profit and loss ratio. B. If he has no loan account, he is going to give cash equal to the amount of his deficiency if he is solvent. If in the case he is insolvent, his capital deficiency will be absorbed by the remaining partners with capital credit balances based on profit loss and ratio. Step 4. Pay the partner's loan account balance if there is any. Step 5. Distribute the remaining cash to partners based on the respective capital account balances and not on the PL ratio anymore. The given steps in the liquidation process are in accordance with the law of partnership as required in establishing a priority on cash payment as follows. First priority are those owing to outside creditors. Second priority, those owing to partners in respect of loan. And the third priority is those owing to partners in respect of capital and profits. Statement of partnership liquidation. For inconvenience in determining the results of the liquidation process is an expedient manner. A working paper is prepared before entries are finally made in the general journal and posted to the general ledger. The fact is, the partners are also in a hurry and eager to know the outcome of the liquidation process, and the accountant will find it difficult to attain a result in a fast manner, considering the journalizing and posting processes, not to mention the closing of the books. This work paper is called Statement of Partnership Liquidation. The statement is patterned after the fundamental accounting equation, which equals L plus OE. Hence, the balance of each amount after plotting every transaction will always balance. For the illustration, partners T, Go, and Wang, who shared profits and losses of 30%, 40%, and 30% respectively, have finally decided to liquidate their business. The statement of financial position before liquidation on October 31 is presented on the table. This table represents the statement of financial position of Tigoang Partnership as of October 31, 20A. The statement is divided into three actions. First one is the asset, second one is the liability. Tigoang Partnership Statement of Financial Position as of October 31st of 20A. For the asset, we have the cash, 4,000, accounts receivable, 14,000, allowable for doubtful accounts, 4,000, and to get the 10,000, we subtract the 14,000 to 4,000. Merchandise, 20,000, furniture and equipment, 70,000, account depreciation, 40,000. Same as here, we subtract the 70 to 40,000, so we get the 30,000 for the credit. So we total this all, 4,000 plus 10,000 plus 20,000 plus 30,000 equals 64,000. For liabilities, we have the accounts payable, 20,000 for the debit, Go loan, 3,000 for the debit also, for a total of 23,000. For partners' equity, we have T capital, 30%, 18,000 for the debit, Go capital for 12,000 for the debit, Wang capital, 30%, 11,000 for the debit also. To sum up it all, 41,000. So the total liability is 64,000 from the 23,000 plus 41,000, same as the total assets.
Case 1, gain on realization. Step 1, record the sale and distribute the gain based on PL ratio. Sale of non-cash assets. Letter A, cash On debit side, 7,000 pesos. Allowance for doubtful accounts, 4,000. Gain or loss on realization, 3,000. Accounts receivable on credit side, 14,000. To record sale of receivable at a loss. To estimate realizable value of account receivable is 10,000 pesos. Since it was sold for 7,000, there was a loss for 3,000 pesos. B. Cash debit, 25,000 pesos. Merchandise on the credit side, 20,000 pesos. Gain or loss on realization, 5. To record sale of merchandise at a gain. Letter C. Cash. On the debit side, 32,000 pesos. Accumulated depreciation, 40,000. Furniture and equipment on the credit side, 70,000 pesos. Gain or loss on realization, 2,000 pesos. To record sale of equipment at a gain. The net book value of the furniture and equipment is 30,000 pesos. Since it was sold for 32,000 pesos, there was a gain of 2,000 pesos. After posting these entries on the respective ledger, all non-cash assets are with zero balances. The gain or loss on realization accounts has the following postings. Gain or loss on realization: A. On debit, 3,000 pesos. On credit side, B. 5,000 and C. 2,000. Entries on the credit side of the gain or loss on realization accounts represent gains, while on the debit side, loss. This account is handler similar to the income and expense summary account. Since the credit side total is 7,000, while the debit side total is 3,000 pesos. The difference of 4,000 pesos represent gain. Attribute net gain on realization based on PL ratio. The net gain on realization increased the capital accounts balances of the partners. In case of the net loss on realization, the gain or loss on realization account will show a debit balance. Therefore, to close the debit balance is to credit the said account, and the debit is capital accounts of the partners to effect decrease on their respective capital balances because of Step 2. To record payments of liabilities. Accounts payable on debit side, 20,000 pesos. Cash on credit side, 20,000 pesos. To record payments of liabilities. Step 3. Not applicable since no partner has developed a debit balance. Step 4. To record payments of partner's loan. Go loan on credit side, 3,000 pesos. Cash on credit side, 3,000 pesos. To record payments of partner's loan. At this point, accounts payable and Go loan accounts are closed. On cash, on debit side, 4,000 pesos, 7,000, 25,000, 32,000 on a total of 68,000 and 45,000 pesos. On credit side, 20,000 pesos, 3,000 pesos on a total of 23,000 pesos. T capital on credit side, 18,000 pesos and 1,200 on a total of 19,200. Go capital on credit side, 12,000 and 1,600 on a total of 13,600. 1 capital on a credit side, 11,000 pesos and 1,200 on a total of 12,200. Cash shown a debit balance of 45,000 pesos. This will be distributed to the partners based on their respective capital balance, not PL ratio broken down. T have 19,200 pesos, Go 13,600, Wang 12,200 on a total of 45,000. Take note that the partners' capital balances total to 45,000 pesos, which equal to cash to be distributed of 45,000. This is the final settlement on the respective claims from the dissolved partnership. 5. Distribution of remaining cash to partners. T capital 19,200, Go capital 13,600, Wang capital 12,200. Cash on a credit side, 45,000 pesos to distribute remaining cash to partners. At this point, all partners' accounts are closed. The settlement of partnership liquidation is preferred as follow. T. Go Wang partnership. Balance before realization, cash 4,000. Sales of non-cash assets and distribution of gain, 64,000. Balance settlement on the respective claims from the dissolved partnership. 5. Distribution of remaining cash to partners. T capital 19,200, Go capital 13,600, Wang capital 12,200. Cash on a credit side, 45,000 pesos to distribute remaining cash to partners. At this point, all partners' accounts are closed. The settlement of partnership liquidation is preferred as follow. T. Go Wang partnership. Balance before realization, cash 4,000. Sales of non-cash assets and distribution of gain, 64,000. Balance 68,000. Payments of liabilities, 20,000. Balances 48,000. Payments of loan 3,000. Balance 45,000. And the cash distribution to partners is 45,000. Partners' loan accounts is shown separate from accounts payable, although these are both liabilities. Loss on realization, no capital deficiency. Assume that non-cash assets of 60,000 pesos were sold for 40,000 pesos or at a realization loss of 20,000 pesos. Non-cash assets are not shown in details for brevity. T. Go Wang partnership. So the balance before realization, cash 4,000. Sale of non-cash assets and distribution of loss 40,000. Balance 44,000. Payments of liabilities 20,000. Balance 24,000. Payments of loan 3,000. Balances 21,000. So the cash distribution to partners is 21,000. Loss on realization, no capital deficiency. Loss on realization, no capital deficiency. Assume that non-cash assets of 60,000 pesos were sold for 40,000 pesos or pesos. Realization loss is directly charged to partners' capital accounts. 1. Sale of non-cash assets and distribution and realization loss. The loss on realization is distributed as follows. T. We have 20,000 pesos times 30% is equals to 6,000 pesos. Go, 20,000 pesos times 40% is equals to 8,000. Wang, 20,000 pesos times 30% is equals to 6,000 of a total of 20,000. In the journal entry, cash on debit side 40,000 pesos, T capital 6,000, Go capital 8,000, Wang capital 6,000. Non-cash assets on credit side 60,000 pesos. To record sale of non-cash assets and distribution of loss to partners based on PL ratio. 2. Payments of liabilities. Accounts payable cash on debit side 20,000 pesos. Cash on credit side 20,000 pesos to record payments of liabilities. 3. Payments of partner's loan account. Go loan on debit side 3,000, cash, credit side 3,000 pesos to record payments of partners' loan account. Cash distribution to partners based on their actual capital balance. T capital 12,000, Go capital 4,000, Wang capital 5,000, cash on credit side 21,000 pesos to record cash distribution to partners. And case 3, loss on realization with capital deficiency and right of offset exercised. Assume that non-cash assets of 60,000 pesos were sold for 25,000 or at a realization loss of 35,000 pesos. So under statement of partnership liquidation, the balance before realization cash is 4,000 pesos, sale of non-cash assets and distribution of loss 25,000, balance 29,000, payments of liabilities 20,000, balance 9,000, payments of loan 1,000, balance 8,000. So the cash distribution to partners T and Wang is 8,000. Under journal entry number 1, sale of non-assets and distribution of realization loss on PL ratio, cash 25,000, T capital 10,000, Go capital 14,000, Wang capital 10,500. Non-cash assets on credit side 60,000 pesos. Number 2, payments of liabilities, accounts payable 20,000, cash 20,000. Go loan accounts is offset against his capital efficiency. Go loan 2,000, Go capital 2,000. Capital 10,000, distribution of loss 21,000 pesos, balances 25,000 pesos, payments of liabilities 20,000, balances 5,000. Therefore, the cash distribution to T is 5,000 pesos. The observation: the capital credit balance of Go and Wang could not absorb their respective share of the realization loss. Hence, the debit balances of 3,600 pesos and 700. Go loans accounts of 3,000 pesos, which is offset against his capital deficiency of 3,600, is not sufficient, so that his capital remains to be in debt of 600 pesos. Wang has no loan to the partnership, therefore no right of offset can be exercised. Since Go and Wong are assumed to be insolvent, their capital deficiencies are absorbed by T in the amount of 600 and 700 pesos, respectively. So, journal entry 1. Sales of non-cash and distribution of realization loss based on PL ratio. Cash on debit side, 21,000 pesos. T capital, 11,700. Go capital, 15,600. Wang capital, 11,700. Non-cash assets, 60,000 pesos on credit side. To record sale of non-cash assets and distribution of realization loss. 2. Payments of liabilities. Accounts payable debit side, 20,000 pesos. Cash credit side, 20,000 pesos. 2. Record payments of liabilities. Go loans accounts is offset. Go loan, 3,000 on debit side. Go capital, 3,000 on credit side. The offset loan against capital deficiency. 4. Capital deficiency of Go and Wang who are insolvent absorbed by T. T capital on debit side, 1,300 pesos. Go capital on credit side, 600 pesos. Wang capital, 700 pesos. To record capital deficiency of Go and Wang by T. 5. Cash distribution to partners based on their actual capital balances. T capital on debit side, 5,000. Cash credit side, 5,000 to record payments of T. Note, if deficient partners 1,000 pesos in T Go Wang partnership. So balance before realization times 5,000 pesos is equal to 3,000 in total of 5,000. Liquidation by installment. In liquidation by installment, the non-cash assets are realized on a piecemeal basis. The basic problem involved is how to equitably distribute cash to partners after payments of its liabilities when are still unsold non-cash assets, and the realization gains and losses could not be determined yet, which also affect the cash payment to partners.
Remedial measures. Theoretical loss approach. In accounting, estimate potential losses on financial assets on credit risk, unlike the incurred loss model, which recognizes losses only with the or unlikely. This approach anticipates future losses at the time of asset acquisition, promoting proactive financial reporting and enhancing stability for Loss absorption's ability approach evaluates a company's capacity to handle potential losses without needing additional fund. It's categorized capital based on its inability to recover from losses. Distinguish between full and partial loss absorption. Theoretical loss approach. Under this approach, a schedule of cash payment is preferred every time there is cash available for contributions of its consider the following. A. The unsold non-cash asset are treated as a theoretical loss or a total loss and is charged against the combined capital and loan balance of the partners based on the profit and losses ratio. B. A partner who combined capital and loan balance could not fully absorb his share of the theoretical loss, will develop or capital deficient, and he is assumed to be personally insolvent. His capital deficient will be absorbed by the other partners with capital credit balance as additional loss based on the loss and profit ratio. C. Only partner with capital credit and loan balance combined after absorbing their share of the theoretical loss and additional loss can receive the cash available for distribution.
Total 6,000. Non-cash assets on credit side 60,000 pesos. To record sale of non-cash assets and distribution of loss to partners based on PL ratio. 2. Payments of liabilities. Accounts payable cash. On debit side, 20,000 pesos. Cash. On credit side, 20,000 pesos. To record payments of liabilities. 3. Payments of partner's loan account. Go loan. On debit side, 3,000. Cash. Credit side, 3,000 pesos. To record payments of partners' loan account. Cash distribution to partners based on their actual capital balance. T capital 12,000, Go capital 4,000, Wang capital 5,000, cash on credit side 21,000 pesos to record cash distribution to partners. And case 3, loss on realization with capital deficiency and right of offset exercised. Assume that non-cash assets of 60,000 pesos were sold for 25,000 or at a realization loss of 35,000 pesos. So under statement of partnership liquidation, the balance before realization cash is 4,000 pesos, sale of non-cash assets and distribution of loss 25,000, balance 29,000, payments of liabilities 20,000, balance 9,000, payments of loan 1,000
to the amount of his combined capital credit and loan balance that appeared in the schedule of cash payment. The amount is being referred to the safe payment. Mechanics of theoretical loss approach. The mechanics of the theoretical loss approach will be best illustrated on the problem represented. Partners is Y and Tan and Co. who share profit and losses in the ratio of 50%, 20%, and 30% respectively. Finally decide to liquidate their partnership, the post-closing trial balance, and the post-closing liquidation. To determine the combined capital and loan balance of each partners after contributions of loss and payment of the unsold and computed as follows. Partners is Y and post-closing liquidation. To determine the combined capital and loan balance of each partners after contributions of loss and payment of the liabilities. Partners, capital balance of SY is 17,500. Tan is 14,000. Co is 28,500. Total of 60,000. Loan balance of SY is 5,000. Capital and loan balance of is 28,500, Tan is 14,000, Co is 28,500. The total of capital and loan balance of the partnership share is 65,000. Theoretical loss represent the book value of non-cash asset which remain unsold and computed as follow. The total non-cash of 69 minus the book value of non-cash asset is 10,000. The theoretical loss is 59,000. Distribute the theoretical loss of partners based of their profit and losses ratio as follow. SY theoretical loss is 59,000 times 50% equals 29,500. Tan theoretical loss is 59,000 times 20% equals 11,800. Co theoretical loss is 59,000 times 30% equal 17,700. Theoretical loss as contributed of the partner share is 59,000. The debit balance of SY will be absorbed by Tan and Co as an additional loss and share between them based on their profit and losses ratio computed as follow. SY Tan 7,000 times 2:5 equals 2,800. SY Co 7,000 times 3:5 4,200 equals 7,000. Therefore, 7,000 deficient of SY, the share of Tan is 2,800 while the share of Co is 4,200. The ratio being established did not include with that of 30%, SY 50% was not included. It was left where the 20% and 30% Tan capital balance after the share of the theoretical loss is 2,200 could not absorb her share of SY deficient of 2,800. The 600 deficiencies of Tan will be absorbed by Co.
The schedule of cash payments. The schedule of cash payments is a detailed plan that shows who gets paid in what order, especially when a partnership is closing down and the business has limited cash to distribute. It tells us how the available cash will be given out to each partner, step by step and based on their priority. How it works. In the example, the table under cash payments shows how the money will be distributed among partners Co, Tan, and C. First is the balance before realization. This is each partner's starting balance before assets are sold off and cash is distributed. Second is loss absorption ability. This column tells us the maximum amount of loss each partner can absorb. In our example, C has the least ability of 50,000 pesos, Tan is next of 75,000 pesos, and Co has the highest of pesos. And in order of payments, the partner with the lowest loss absorption, which is C, will receive cash first before they can handle less loss. Once C is paid up to 50,000 pesos, the next cash payments go to Tan and then finally to Co if there is any cash left. And in this distribution over time, since cash may not be available all at once, the schedule may show payments across different rounds. For example, when the first batch of cash comes in, it might be used to pay C first. When more cash is available, Tan and Co get paid according to the remaining priority order. The loss absorption ability approach. This approach helps partner in a business partnership decides who gets paid first during liquidation. especially when the business is shutting down and cash is limited. The goal is to prioritize who receives cash based on their ability to handle losses. And there are mechanics in the loss absorption ability approach. First is determine balances before liquidation. We look at each partner's capital and loans balances before any assets are sold off. These balances are typically from the partner's financial statement. For example, we see the balances for partners Co, Tan, and C in the table. Step 2. Calculate each partner's loss absorption ability. We determine how much loss each partner can handle based on their share in profits and losses. This calculation is important because it tells us the priority for cash payments. Those who can handle this priority. In our example, we calculate each partner's ability in pesos. Co has 100,000 pesos, Tan has 75,000 pesos, and C has 50,000 pesos. And in step 3, rank partners by loss absorption. After calculating the loss absorption amounts, we rank the partners. The partner with the lowest ability to absorb losses gets cash priority first. In this example, C has the lowest ability of 50,000 pesos, so C would get paid first, followed by Tan and then Co. Step 4. Allocate cash based on excess over ratios. We start distributing cash based on how much excess each partner has over others. We use percentages based on the profit and loss sharing ratios to determine exact amounts. For example, if Co has an excess of 25,000 pesos over Tan, we calculate Tan's share as 7,500 pesos using Tan's 30% share in profits and losses. Once we complete these steps, we get a cash priority programs that tell us exactly how much each partner receives. This helps ensures that the partner least able to handle losses is paid out first, followed by others in a fair and in orderly way.
Cash priority program. So it is a framework used during the liquidation of a partnership to determine the order in which cash distributions are made to partners. Cash priority program of STC partnership. As you can see, there is the loss absorption balances and the cash payments of Sai Tanco. So balances before realization. So Sai has a capital of 20,000 pesos. Tan has a capital of 15,000 pesos. Co has a capital of 30,000 pesos. So there's Sai has a loan of 5,000 pesos. So the total partnership interest of Sai is 25,000. Tan is 15,000 and Co is 30,000. So plus the profit and loss ratio of Sai is 50%, Tan 20%, and Co is 30%. So the total loss absorption ability of Sai is 50,000 pesos, Tan 75,000 pesos, and Co 100,000 pesos. So before the liquidation process takes place, the program tells us already who among the partners will be given priority over cash as it becomes available for distribution. So the first cash available of 7,500 should be given to Co. And the next cash available of 12,500, 5,000 is given to Tan, and 7,500 is given to Co. That is cash available for distribution is exactly 20,000. As you can see here, the cash distribution is exactly 20,000. So the share of Tan is 5,000, while the share of Co is 15,000, and that Sai will not receive anything. If cash available for distribution will exceed 20,000, the excess will be divided among them based on their respective profit or loss ratio of 5:2:3. So this means that Sai will only have a share of cash is of 20,000 at the rate of 50%. So if cash available exists of 20,000 is 10,000, it is distributed as follows. So the partner side Tanco, there is an excess of 10,000. So the profit or loss ratio of Sai is 50%, Tan 20%, and Co 30%. So the partner share here illustrated, Sai's share is 5,000, Tan's share is 2,000, and Co share is 3,000, with a total of 10,000 pesos. So now let's move into the application of the cash priority program. So as illustrated, the schedule of cash payments is used in the distribution of cash under the theoretical loss approach will give us the same result with the cash priority program under the loss absorption ability approach. So here is how it works out. So let us use our previous illustrative problem. So the non-cash asset will be realized as follows. So month realized, July, August, September. The book value of July is 10,000, August is 40,000, September is 19,000. So the total of the book value of the July, August, and September is 69,000 pesos. So the cash realization of July is 5,000, August is 11,000 for the total of 26,000. So the loss on realization of July is 5,000 since the book value minus the cash realization of 5,000. So the loss on realization is 5,000. August is, the book value of August is 40,000 and the cash realization is 11,000. So 40,000 minus 11,000, loss on realization is 29,000. In September, the book value of September is 19,000 and the cash realization of it is 10,000. So 19,000 minus 10,000, the loss on realization is 9,000. So the total of loss on realization overall is 43,000. So the cash available for distribution is computed as follows. So the cash balance before liquidation is 15,000. July 10,000 and 5,000. So add cash realization in July installment to 5,000. So the total of 20,000. Less payment of liabilities of 14,000. So total, the first cash available for distribution of July is 6,000 since 20,000 minus 14,000 is 6,000. So the second cash available for distribution of August is 11,000. Since it was, as you can see in the illustrated, third cash available for distribution of September is 10,000. 10,000 cash realization. So the total cash available for distribution to partners is 27,000.
Next is the schedule of cash distribution based on cash priority program. So this schedule shows how available cash is partner, C, TAN, and Co according to their priority program. This distribution process is divided into 4 steps based on the cash received on different installments. First, cash available of 6,000 is given entirely to Co. Second, cash available of 11,000 and 1,500 goes to Co to satisfy her claim, and the remaining 9,500 is divided between TAN and Co at the ratio of 2:3. So TAN gets 2/5 multiplied by 9,500, and the result is the 3,800. And ko, it gets a 3 over 5, and it is multiplied by 9,500 again, and it is the result is 5,700. Third, cash available of 10,000 pesos. So at this point, the 17,000 pesos, which is we add here the 6,000 pesos and the 11,000 pesos, so the total of 17,000 pesos. And it has already been distributed to reach the priority amount of 20,000 pesos, and another 3,000 pesos is divided between Tan and Ko using the 2:3 ratio. So Tan gets 2 over 5, and it is multiplied by 3,000, and the result is 1,200. And Ko gets 3 over 5 multiplied by 3,000, and the result is 1,800. So the excess cash of 27,000, the 7,000 rather, the total cash available at this point is the 27,000, but only 20,000 was needed for priority claims. So the extra 7,000 is distributed to the partners based on their profit and loss sharing ratio of 5:2:3. So C gets 5 over 10 multiplied by 7,000, and the result is 3,500. While Tan gets 2 over 10 multiplied by 7,000, and the result is 1,400. And Ko gets 3 over 10 and multiply again by 7,000, and the result is 2,100. So by the end of each partner's total cash received is C receives 3,500, Tan receives 6,400, and Ko receives 7,100. So the total cash of undistributed is equals to 27,000.